Hello and welcome to Reportage. This is Danish bin Nabi. In today's segment of Reportage, I am joined by author Mr. Mukesh Jindal to talk about his recently released book, Crypto the Disruptor, which is published by Penguin Books. The book traces the history of money and global economy from Stone Ages up till present. More from the author. Mr. Jindal, before we go into the details of the book, let me start with a basic question. When it comes to market investment and money, people are very afraid of investing money into the markets. Why is it so? Why is there this sort of a barrier in people's mind not to invest money in markets?
Danish, thank you so much for asking this question. And I think you've rightly said that people have this fear of not putting the money in the markets, and the fear comes from the fact that people in the past have had bad experiences. They have been investing in stock market generally when markets have been going up. They have been investing on the basis of the information of something which they heard over the meetings or the parties, and they have been investing. It has generally been not been made, the transactions or investments have not been done with proper knowledge, and that's why the people have burned their fingers, and that's why they feel that the investment, especially in financial instruments, is not a great way of money. And that is one reason, if we look at the allocation of money in India, majorly the allocation is in physical assets. It's in real estate, it's in gold. And that's what, the investors have heard from the ancestors, that physical or tangible assets like gold and land is a much safer revenue. And that's one reason. But if you ask me, I've been into the wealth management and private banking for almost 20 years now. From my experience, what I feel is that investors have two requirements. One, they want the maximum return possible. It's not that people are not hungry for the return. Investors are always hungry for the return. More the merrier. There's no doubt about that. The second condition is that they also want protection of the capital and a minimum return of fixed deposit. So the requirement is minimum return of fixed deposit, and also on the higher side, they want stock market kind of return or even better. So the hunger is there. It's just that people don't have the knowledge, the time, the expertise to invest in these avenues. But otherwise, I think the people are hungry for returns. And I think in this new generation, this is really getting covered up, because the kind of participation which we are seeing from the new generation in investments in equities, crypto is phenomenal.
So, if we have proper guidance, people would invest in the markets. And if they feel safe and secure that their money is safe and they will get benefits, and there is a guidance, proper guidance for the common people, they would invest in markets.
100%. If people have good experience, if people feel confident and safe about investments, they will 100% participate. And big number which I want to share with you, Danish, if you look at the mutual fund investors today, mutual fund investors in India, we have 4 crores now, which is though very small as a number when compared to a population of 130 crores. The participation is only around 6% of the population which can really invest, and this number in global markets average is around 60%. So the participation is less. But lately, what has happened is that people have become very comfortable with something called SIP, systematic investment plan in mutual funds. People have become aware about it, maybe because of mutual fund sahi advertisements, and people have had made money by doing regular SIPs. So if we see the SIP investments which are coming on a monthly basis, it is now coming 20,000 crore, and it continues to goes up every month. And the only single biggest reason is that people have become more comfortable. They've got the knowledge, they have been investing, they feel safe about it. And I see this participation becoming bigger and bigger. So to answer your question, if people have the knowledge, if they feel safe, there's no reason investors will not participate in these avenues.
Now let's go talk about the book. One of the fascinating things which I loved reading is about the Rothschild family. And there is this belief, the conspiracy theories, that they basically have a hold on the global economy. They are the masters of the financial system around the world. But on the contrary, you write, and I quote, theories about Rothschild controlling the global financial system are nothing more than child fantasy. Explain it for the viewers who these Rothschild are, what's their history, who was Nathan Rothschild, and what was his contribution in the Battle of Waterloo.
So, the Rothschild family has been very popular. Everyone must have been heard about it. And the stories around that generally doesn't comes like this. In their era, in their period, they have controlled phenomenal businesses. They have dynamically changed the businesses, and they were among the richest of the families. But what is important is that it's
So,
just not about.
just for the viewers, this is which century? This is 1861 or 1813 around.
So it's in the early centuries of the 19th century, which we're talking about, the 1830 and around that period, and that's when they became very big and started doing and dynamically putting money in the capital businesses and other financial businesses. What is more important is that they were able to read the trend of the economy. They were able to read what is going to change and accordingly allocate the money what is going to play out. And what is also important, Danish, like in India or globally, the financial instruments which we talk about, the wealth management we talk about, the family office which we talk about, we are sitting in 2024, but it all came from them. They did it, the allocation of money in different avenues, in different businesses, in new generation avenues. They have been doing it even from 19th century. Like today, we
But
spoke in the
how was
beginning
this
that
Nathan Rothschild? How was he able to predict what was coming out of those the bitterness between France and Germany? Sorry, France and Britain. How was he able to foresee it so that he could put the
no,
bonds? Yeah,
no, you're saying something. Please continue.
no. How was I'm only asking you? How was he able to foresee it? What is going to happen in the markets?
See, I think what Dennis is very important. It will be wrong to assume that he had some kind of foresightedness about what is going to happen. The philosophy with the Rothschild followed is that they need to diversify the wealth. Okay. And when I said diversify the wealth, they also wanted to put the money into avenues which were very high risk and which could generate phenomenal returns. And a part of the money was getting allocated to the instruments, or the events which could generate phenomenal wealth. So one of the reason is that they were allocating the money in these kind of events, and it's not just about putting the money in war, putting the money in new generation industries, doing capex, railways, or even in the finance or insurance business. They were spreading it, and they were ready to willing and experiment. And that is one thing which why this the story is also explained in the book is crypto is again a new technology, and understanding and putting that is equally so important.
So in the book, you also mentioned about Nathan Rothschild, the five brothers of Rothschild, that they basically, because of Waterloo War, because of that battle, it abruptly ended. They end up at the losing end with their money, which is completely a contrary what has been fed to the people, that they were the most, rather they were the in charge of the economy that time.
Of course, they were the in charge, and of course, the things when they make a bet, things definitely don't play out, and that is the reason why I was trying to highlight that the people perceive that they control the global economy, and it's not like that. They have the money in the businesses. People perceive they control the wars, and there are a lot of stories around that, but it is not absolutely true.
In the book, you have also mentioned the tulip mania. But before I come to the tulip mania, let me ask you, let's straight get down to the India. 1863, Premchand Roychand. You, in the book, you mention him as the India's Rothschild. Who was he? What was the cotton industry about? And why did Americans took the cotton from India and not from the Britain?
So, he's a classic example of a person who used to, he was among the richest person, and he used to finance the British government. And, even the wars which British government went into, the wars always required a lot of money. And he was one person who was taking advantage of all the trades. And if you look at the history of all the wars, all the traders,
Mr. Jindal,
yeah, you were saying.
for the viewers, where was he based?
No, of course, he was based in India and his businesses were all spread around. Yeah, but what is also important, like the traders, what I was also trying to inform is that during the war period, the traders have always financed the war. If you look at any history, even in, let's say, we have an Israel-Palestinian war, the material is going over there. Like if you look at the insurance industry, if you talk about the insurance industry, or the, when the oil is being sent, there are some people who insure that, there are some people who take a transaction, who finance it, and there are these kind of traders who make a lot of money. There are, businessmen who finance the governments as well. And so, there have been always these kind of people who have been taking advantage of it. And yeah.
And he was one of the instrumental factors. But again, like the Nathan Rothschild, he again ended up after only few years when the American Civil War ended. He again ended up at the losing end.
Absolutely. So, there's all the wealth was lost, and the trade got changed. The cotton trade, which India dominated, moved to the Britain after the industrial age. We had the industrial revolution after the steam engine, and especially after, the electricity we had, and the textile was a huge beneficiary. And of course, the trades did not play out as well. So yes, you end up losing. And what is also important is that, there are cycles, the boom and burst which happen. And if the trade goes wrong, you're on the reverse cycle.
Mr. Jindal, let me ask you from completely a political point of view. As you rightly said, that Premchand was in hand in glove with British. All their wars were funded by Premchand. Why have we not read about this character in our historical books? Why this character
There
has
are,
been missed?
Danish, there are many things which are not read in the historical books. And that is one reason why blockchain is so important. As we discuss about blockchain, see, histories are written by people who are the rulers who want to write their way. And histories have always been manipulated. Okay. And these are some information which, of course, maybe at some point of time it was available, but there have been not enough data. In fact, the Indian history, we have very little data. If you look at the the European history, which is one of the oldest, you have so much of data. In India, you hardly have any data. And that's where the, one of the feature about blockchain, as we discuss in the, in the coming questions, is that blockchain records all the data which cannot be changed. Like history, the biggest challenge is that, even if someone knew about Premchand, maybe it was deleted from the data. Maybe it was not favoring. Maybe it was turned around. Maybe it was manipulated.
I am amazed to know this, that the character like Premchand haven't been defined in any of the books which we have read so far.
And even
I think myself, this is for the first time I am reading about the character that we have a Premchand in 1860s who was responsible for all these things that have been happening in the country.
That's very fascinating. And when I was writing the book, when I was trying to do Google about it, read books about it, there's not enough information. The literature is not enough. But let me tell you, there's a lot of work which is happening, and very soon you're going to see a movie also coming on Premchand.
On Premchand.
Seems like.
That's wonderful.
Yeah.
And that would be released this year only?
No, the discussions are on, in the sense that's what I come to know from my friends.
Still in the production period. Yeah.
Yes. Yeah.
Yes. Another fascinating anecdote which you have mentioned in the book is the tulip maniac in Denmark, 1637. What was tulip mania? What was it basically, and how did it basically affected the Danish economy and Danish market?
See, tulip mania is a classic example of human greed and the foolishness. And you can imagine a tulip flower being priced, in millions of dollars. And this is something, a tulip, a flower, a product which doesn't have a very long life. But what happens is that narrative or the story starts playing on top of each. Like, so for example, today you tell me, sunflower is something very valuable. There's a huge consumption. We spread the news, and people, if they start buying this narrative, suddenly the demand goes up. So something very classic happened in the tulip mania. And, the demand, people started believing that this is the most valuable thing which people started buying, and before they could buy and sell the same day, the prices used to go by 20-25%. So biggest challenge which was happening is that people were not trying to understand the fundamental reason behind it. And that's one reason why the Dutch economy got collapsed, why people, the Dutch people who were one of the richest had a huge setback. People became poor and people lost a lot of wealth. And in all the burst cycles which are ever discussed, the tulip mania is one of the biggest and the most craziest. And if you tell this about a young generation, they won't believe that a single flower can cost so much. So it's amazing stories, but it's still believable because humans are driven by greed. So in the beginning you asked, will people invest? Why don't people invest in higher risky? But if you tell investors, from my experience, that if the return is going to come, people are going to put money. They are not going to study so much. They will chase the return.
And towards the end of the book, you write about the opening of Chinese economy after Mao passes away in
Yes,
1976.
yes,
And how
yes.
did opening of the economy, the capitalism, the title chapter, in which you have discussed this Chinese model of economy. How does opening of the economy help China basically, which we did 20 years later in 1991?
So, if you look at the Mao's period, which, ran till 1966 or something like that, and it was one of the worst period of Chinese economy after the independence in 1947. Now, during this period, the Chinese economy became inclusive, and they were against entrepreneurship, against the free trade, and that was one period when the Chinese economy growth fell from 6% to 2%, and the poverty rate significantly went up. And that's where the government change happened after his death. Deng Xiaoping came in, and he brought in a new era. He opened the economy. He created SEZs. He brought in external investors. Free trade was
For
made.
the viewers, SEZs are special economic zones.
Yes, special economic zones where the tax benefits were given to the companies, and the foreigners were willingly asked to come in, bring the manufacturing, to bring the capital, and also they could take away the capital back. Now, what happened is that during this period, the capitalism, the true form of capitalism, really went up, and that was a period when the Chinese economy really started going up. It was the period when globally in the history of the world, the poverty rate, the number of population which came out of poverty rate had a maximum increase. Now, I have tried to explain this question is a lot of time, in India, globally, people debate about being socialism, about being communist, about, being driven by welfare state, and also about capitalism. What we have seen is that a capitalism is one of the fantastic form of government if managed properly. A lot of time, we have a quasi capitalism kind of thing where the regulator, government strictly manages it. Like democracy is, a lot of time not, you have a full free complete democracy, you have a semi democratic countries. So similarly, full capitalism, we have seen the benefit of that in China, which now Xi Jinping is trying to curtail it, which is not good. And if you look at the last 5 years, especially after the COVID period, the Chinese economy is struggling because it is hitting the same pillars which brought capitalism in the China. Of course, India brought it opened up the economy in 90s, and we are seeing the dividends of that, benefit of that, but there's still a long way to go.
Still a long gap. Now the elephant in the room and the last chapter, which deals with the crypto. What are these bitcoins? What is this concept? And how is India doing as far as these bitcoins are concerned?
So, Danish, you'll be amazed and surprised to know how well India is doing. Okay, just to give you some number, in India, there are, I told you, 4 crore mutual fund investors. Okay. You'll be surprised to know that there are on around 2 crore crypto investors. So mutual funds in India have been in existence since 1964 for the last 60 years. Despite all the efforts, only 4 crore population have invested in mutual funds. Crypto investors, crypto has been lately been popular in last 4-5 years. Already 2 crore investors have participated in crypto. So you can imagine the kind of participation. In fact, one of the reasons why I wrote the book, crypto, one of the key reason is that if you look at these crypto investors, then most of these investors are under 35 age, and most of them lose money in crypto. As per data, 99% of the crypto investors have been losing money. The reason is that they don't understand the fundamental of cryptos. They just think it as a quick way of getting rich. So one of the reasons why I've written the book is that people need to understand the journey of money. What has been the different issues? What is the current issue in our system, overall system, and why crypto is coming out of the inefficiencies of the system? There's a fundamental reason behind that. Now, what is the fundamental reason? Now, Danish, what is happening is the web, the internet is going through a revolution. There have been 3 phases of revolution in internet: Web 1, Web 2, and Web 3. Now, Web 1 was a period of information. If you remember, the internet which came in 1990s, the early user, I'm sure you must have used in 1990s a computer, the web page. There was a yahoo.com, there was a indiatimes.com. You could only download the information. It was a huge directory of data over there in the 1990s. And people could not envisage that what kind of disruption the internet is going to make 30 years down the line. They could not envisage that one day you will have a Uber or Amazon, and from where you could order things, and you could send mails. People could not envisage this kind of things. Then the Web 2 happened. Web 2 started in 2004, which is also known as the age of interaction. It was an internet of interaction. During this period, you had Facebook and YouTube. People could interact among themselves. People could create content on their own, and it could be distributed to people. So today, what we are trying to do, we are creating a content, putting it in YouTube, and other people are going to watch it. It gave a lot of power to people, and it has been fascinating. Now, the challenge, if you look at the challenge in this system, is that this data, like the data is stored with the YouTube data is highly centralized. It's being controlled by few companies, large companies or large servers, which monetizes this data for their own benefit against us. That is one challenge. Second, the government also has a control. Any content is not your own content. Okay, it can be manipulated, changed, and whatever it wants. So there are inefficiencies to it. And that's why we are entering something called Web 3. In Web 3, everything is decentralized. No one is going to own anything. It is us. We are going to upload our content, the data creator. Data's ownership will stay with us. It will not be at any central place. And then it will be used by third party. Now, it is our choice. How do we want that ownership to change? And this is very powerful because this directly brings ownership of data to the individual person. And this allows people more freedom, more ownership, and more participation, which I believe is phenomenal. And people hear only about Bitcoin. But let me tell you, Bitcoin is just one of the applications. There are hundred of other applications which are being built and which are going to disrupt the whole of the financial services, the whole of the the world, how we interact. And this is what is explained in the book.
So, talking about the Indian future as far as crypto is concerned, what do you foresee about crypto in India?
See, India, what is happening is that one of the biggest challenges is a regulatory hurdle. Okay. And there's no denying the fact that the participation of people is going up, the investors are going up. There are fantastic startup ecosystem which is being built up. You have a Polygon, and which is a blockchain technology. There are many other applications which is being built up, and it is very important that India doesn't misses on this opportunity. India is the land of coders. It's a land of startups. It's a land of entrepreneurs. And it's very important that we are also able to participate in this blockchain technology revolution because it's just the tip of the iceberg. So, one, the participation should happen. Second, the use case of blockchain is significantly going up. Just for a classic example, you are based, Danish, in Delhi. There's an app called DigiYatra. The DigiYatra app, the data is hosted in blockchain. It is not hosted in any central server. It cannot be manipulated. Recently in Maharashtra, one of the district has issued caste certificates on blockchain. One of the biggest challenge with the registrars is that the data get manipulated because there are some people personate. Once the data is in blockchain, it cannot be manipulated. So the use case is going up, and I see a huge potential that it will only become bigger and bigger. And but what is also important is a regulatory challenge. Government has not come out with any stand whether the crypto is legal or it's not legal, and the RBI is not in favor of it. Government has recently made it taxable, which is absolutely fine. It has clarified what is the kind of taxation which it comes. But I think it's very important that good regulations are important so that people are able to participate in crypto in a very good and efficient manner. And why this is important also, Danish, I'll add one more point to this. There are a lot of inefficiencies in the system. The crypto will help us remove this inefficiency. Just a classic example. Let's say you are an investor in stock market or a mutual fund investor. We are sitting today on Thursday. Okay, the stock market is we are sitting at 2:30 p.m. Stock market is going to close at 3 p.m. Okay. Now, let's say you have invested in equity mutual fund. You need money. Now, if you put redemption today on Thursday, Friday is a holiday because of Good Friday, Saturday, Sunday, 3 days gone, transaction not getting executed. It will get executed on Monday, and then it will come after 3 working days. And in between, there are holidays. So you are executing redemption on Thursday. You're going to get money next week. In Bitcoin or crypto, if you redeem now, you get money in 1 minute. You get money 24/7. The exchange runs 24/7, 365 days a week. It's your money. The money should be in your account immediately. In fact, SEBI chief recently, she highlighted, they are moving from T+2 basis in the stock market to T+0. And in a recent interview, the SEBI chief clearly said that it's important we come out from this and bring T+0. Otherwise, the new generation will be investing in these kind of newer revenues. So what I'm trying to explain that these kind of inefficiencies is what it will help us in.
Mr. Jindal, are you suggesting that young people, not only young people, majority of the people should invest more in crypto or Bitcoins?
See, whether to invest or not, it's a very, very personal decision. But what I'm also trying to highlight, Danish, recently on 11 Jan 2024, US has approved Bitcoin exchange traded fund. An investor in US can invest in a mutual fund which is investing in Bitcoin. The large advisors over there, like Fidelity and other players, are now advising even conservative investors to put 1-2% of the money in Bitcoin, because historically it has given per annum return of around 150%. Of course, it has a huge volatility. It may crash by 80% also. There's a huge risk. But putting a part of the money in the Bitcoin, which can give phenomenal return, because the crypto technology is in a very initial period. If people can learn about it, understand the risk, and participate in it, then it can lead to phenomenal wealth creation. From a theoretical perspective, from a US perspective, from a portfolio perspective, it may make sense. But in India, the regulator doesn't allow advisors to advise on the crypto. It doesn't, has given any. So those kind of challenges are there.
Mr. Jindal, let's end this long discussion about your book on this positive note. And we do hope that we see proper regulations from the government as far as crypto is concerned. Let me hold your book once again for the viewers so that it reaches more people and more people read your book and understand what Bitcoins, what crypto is, what about the history of global financial system. Thank you very much for talking to me. Thank you, Mr. Jindal.
Thank you, Daanish.
Please subscribe to our channel Reportage and press the bell icon to remain updated.